A question emerged at one of our legal English courses: what is the difference between tax and duty? Tax is a mandatory obligation payable to the government levied on income, wealth, services, sales, etc. Duty is a fee charged by the government on manufacture and import, export of goods levied on goods and financial transactions. Duty tax on imports and exports, meaning and examples. A duty is a tax levied on certain goods, services, or other transactions. Governments commonly impose customs duties and other taxes on imports and exports. Duties, which are a form of revenue, are enforceable by law and may be imposed on commodities or financial transactions instead of individuals. The term duty also refers to the responsibilities held by an individual, especially someone in a position of power. A duty is a form of taxation levied on certain goods, services, or other transactions that are imported and exported. Duty rates are a percentage determined by the total value of the goods paid for in another country. Duties provide a form of commerce protection for jobs, the economy, the environment, and other interests by controlling the influx and outflow of merchandise. A duty may also be someone's moral or fiduciary responsibility. Governments impose taxes on individuals and companies that make or receive shipments internationally. These levies must be paid before delivery can be made. These levies are called customs or import duties. These are tariffs or taxes imposed on goods transported across international borders. Customs duty rates are a percentage determined by the total value of the goods paid for in another country. The quality, size, or weight of the product are not determining factors. The harmonized tariff system of the United States is used domestically as a reference for applicable tariffs on merchandise imported to the country. The intent of this form of duty is to provide a form of commerce protection for each country's jobs, economy, environment, and other interests by controlling the influx and outflow of merchandise. Duties may be imposed on restrictive and prohibited goods that are shipped in and out of a country. The imposition and collection of duties also help contribute to a nation's revenue pool. Customs duties can be revoked in certain situations, such as an airport's duty-free shop. When customers shop at a duty-free shop, products that are usually taxed like cigarettes and alcohol will not have a duty levied on them. Foreign visitors can then purchase the goods at a lower price compared to domestic citizens. There are limits and guidelines for shopping duty-free. The products purchased are intended to be taken out of the country where they were bought. Shoppers generally have to show their passports when making duty-free purchases.